Hi there. Today we're going to talk about relative strength, which is the idea of looking at a ratio of one stock or security relative to something else, a benchmark or another stock, a sector, something like that. This is different from the Relative Strength Index, RSI, and that's an important relationship. And RSI is a measure of a specific price momentum, right? A specific stock or an asset, how it normally trades, and then how what the momentum is relative to that normal trading range. Relative strength, true relative strength, is different. It's a comparative relative strength. So you're looking at usually a price of a stock, for example, Apple or something, relative to the S&P 500 or some other benchmark. How is this security doing relative to all the other securities I could be buying or selling at a certain point? Looking at the chart here, we're looking at a chart of Alphabet, looking at the last 1 year on a daily basis. And at the bottom, you can see we have a ratio of Alphabet versus the S&P 500. Now, the way that we do that is actually in the bottom when you add price performance as one of your indicators. You just simply add the ticker, colon, and then the benchmark or whatever you want to do the relative measurement to. So in this case, normally I would do it relative to the S&P 500 index or the spiders, just some broad equity benchmark. Now, looking back at the chart, we can now get an understanding of what the price is doing of Alphabet, but also how that stock is performing relative to all the other stocks we could be looking at in our universe. So in this case, from August to the low in December 24th of last year, you can see lower lows and lower highs in the price of the stock. In the bottom, we can see this ratio going lower, showing you that Alphabet has been underperforming the S&P 500 during that period. In a period of transition or stabilization, the ratio will go sideways, telling you that it's moving in line with the market. It's a market performer. But as Alphabet started to improve, and really it started to outperform actually in November and December, you see lower lows in the price, but the relative strength is actually starting to improve. So even though Alphabet is going lower, the relative performance is increasing, which means other stocks are actually going lower much further than Alphabet is. So by looking at the price and also looking at the relative strength, you can make an assessment of whether or not the price is in an attractive technical configuration, but also whether that stock is looking good or bad or attractive or unattractive relative to other stocks that you could be buying or selling. This is actually a great example of where you might want to use the two of them together. So if we look coming out of the December lows, if you look in January, you can see that Alphabet has increased, right? Higher highs, higher lows, and a good uptrend. But look at how the relative strength is actually sloping downwards. This is because a number of stocks actually were accelerating out of those December lows, really improved in January into February, while Alphabet was improving but not quite as much. So you might have the right call on the chart, but if you don't have the relative strength on there, a lot of times it can be unclear as to whether or not you're really looking at the right chart in the first place. One final comment on relative strength is remember that you can always look at an asset relative to anything. So you could look at Alphabet relative to the XLK, look at it relative to technology stocks, to a specific group like biotechs. You could look at two stocks relative to one another. The most common thing is to look at it relative to the benchmark that's going to be most applicable to you and your investment process.